the passenger vehicle is going to remain sluggish, two-wheelers will remain under pressure, and commercial vehicles, which have been doing well, is likely to continue the momentum. Let's take the conversation forward with Mr. Naresh Jalan, MD at Ramkrishna Forgings, to understand how the auto sector is really performing. Mr. Jalan, good afternoon. Thank you so much for joining us. First up, if you can begin by telling us that you've received contracts worth rupees 220 crores during Q3, now with another 75 crore order per annum. How does your revenue outlook change over the medium term?
No, I don't think it has improved in the recent past. While it is holding on still, I think semiconductor issue is playing around. And I think this is going to be there probably for another 2 quarters. Any demand which surge we can see only after semiconductor issue is sorted out.
In India is improving, but is it still far from the peak level?
I think in terms of our sales, I think we are doing extremely well. We are much ahead of the market in terms of our utilization in capacity and overall growth in the CV business. Because whatever we have done over the past 2 years has helped us in basically not depending much on improvement in the CV cycle. And in FY23, we expect overall domestic market to do well. Only exports right now we don't have much clarity on. But as far as RKFL is concerned, we look to have a very good year in FY23.
Good year as far as FY22 is concerned. Domestic is something which is doing well, though exports is something which remains a bit uncertain. But what about margins going forward? Given the raw material pressure, you are able to pass it on as far as the domestic business is concerned, but overseas comes with a lag. In that context, how should margins shape up in Q4?
Yes, we are very confident of maintaining our margins. Going forward, only thing we are looking at energy prices also now, because of post the war, I think energy prices are changing drastically across all markets. So we would need to look at the energy prices, how it shapes up and how it affects our margins going forward, and how we can pass the same to our customers.
Your non-auto segment contributes 11% to the overall revenue. How do you plan to increase that?
FY23, we should look to have a very decent order book from the non-auto space, and we are looking to at least have 15 to 18% from business from the non-auto sector. And primary focus will be earth-moving equipments and oil and gas.
Well, Mr. Jalan, you've earlier mentioned that you are looking to become debt-free by FY25. Can you talk to us about what's the trajectory, and in the near term, what kind of debt reduction can we envisage?
We are starting our debt repayments in a expedited manner from this year onwards, from FY23 onwards, and we are looking to be in next 3 years a debt-free company, net debt-free.
Promoters have been buying a little bit of shares in the company in the recent past. Do you plan to further increase stake?
Promoters have always found value in the equity of the company. So we have been on a continuous side on the buying and increasing promoter stake, and this will be our endeavor going forward also.
Okay, Mr. Jalan, thank you so much for joining us. We'll let you go on that note, but let's move on.